All right, thank you very much. I'm glad to be here today to talk about work after retirement or from career jobs. It's a long-term project for me and my team that you see up there. It's also something that Kathleen has been a leader in funding. And so I just wanted to start by thinking a little bit about what this might mean. And if you look at the increasing life expectancy and how things are moving out, who's really interested in this working longer? And so it's always good to start with a quote from our host. John is famous for lots of things, and here's one of them with his quote of saying, we have a couple attempting to finance retirement, a 30-year retirement with a 40-year career. It won't work. There's several things that one could add about that. I suspect that quote has also been in some of your popular magazines that you're aspiring to, John. But if you'd stopped there, it would have been very incomplete. I want to return to that comment in a minute, but it would have been incomplete because there are other stakeholders here. It's not just the couple trying to finance their retirement. It's also the employer, and if the person has to be a government employee or something like that, it's the government. At the federal level, it's the federal government, and then ultimately it's the taxpayers as well. So there are a variety of stakeholders with all having an interest in this financing of retirement the way we're doing it in most countries. Then John goes on to say, economic institutions adjusting them to dramatic longer lives. And this is also true, but it's also not that a person has to work longer on a single job in order to move this length of time retirement out. And this is particularly important for our talk today as we move forward in the public sector. Of course, we also have a nice statement on Kathleen's website about her program. Americans are working longer and continuing this sometimes by choice and sometimes by financial reasons. We could also add health and some other things there that we've already been talking about today. So how can we focus this research? And Kathleen has been a leader in funding some research in these areas. We have relatively little research looking at this long-term pattern of how you go from your career job to whatever follows that. And I think that's one of the great things that Sloan is doing right now is funding a lot of different studies to look at this whole path of going from full-time work, a career job, to ultimate or permanent retirement. We do know some things about what's going on as we try to think about this. Everybody else has already talked about increases in life expectancy and how do you balance that in making your lifetime plans. We do also know, and I think Professor Pencavel yesterday pointed out, labor force participation are rising across the country. And if we look at the data from the BLS, not by single years, but just by these groups, there are fairly substantial increases in a relatively short period of time of 2 decades. We know that prior to the late 1980s, early 1990s, there was this long-term trend toward early retirement. That certainly has been reversed. Although if you looked at younger ages, the participation rates of people in their 40s and 50s have been drifting down a little bit. Sort of hard to figure on that given these findings here. One of the things I've been doing in lots of different settings is looking at the public sector. Trying to get people to be more concerned about retirement in the public sector, the adoption and changes going on in public sector pension plans. We've had a number of conferences in this area that some of the people here have been to, looking at the changes in public sector pension plans and how that's affecting the public sector workplace. And again, returning to John's comment, for public sector workers, it's more like, are they going to finance a 40-year retirement with a 30-year career for many of these people? And if you didn't think they could do 30 and 40, they can't do 40 and 30 for sure. And yet we have lots of plans that are encouraging people to retire after 30 years. I should say we're going to look at career public sector workers. Of course, not all people that enter the public sector stay there for a full career. And so some people leave. There's been some work showing teachers leave early. How long do teachers stay in a particular time? But we're going to be looking at people toward the end of their career. And one could really ask the question in lots of ways about why do public sector employers today want to encourage people to leave so early? Now, maybe once upon a time there was a reason for that. I'm not sure it ever was, but certainly today, if you think about many types of public sector workers, they're no different than the private sector workers. So why are public employers giving people a little nudge to leave so early? And if you look at what's happening in many of the reforms around the country on these public sector pension plans, they're making these changes to eliminate some of that encouragement. So what we're going to do here is to look at the public sector transition from full-time career jobs into complete retirement. This is a 3-year grant from Kathleen, and we are looking at a variety of different ways of trying to measure this. We've conducted 2 surveys already. We have a 3rd survey that we're about to go into the field with in the spring. This has been a quickly moving project, so you'll see some of the numbers here, but all of these surveys have been conducted in the last 2 years, one in 2014, one just this last spring, which we didn't get data until July, and John had this conference, and so it's been a push to look at that, and then we're going back to some people in the spring. We also have administrative records from the North Carolina retirement system. So our project is looking at North Carolina. I'm happy to discuss with you why I think North Carolina is sort of a representative state in some ways. It's the 9th largest state by population. It's got a mix of different types of industries. It's fairly diverse with a fairly significant minority population. And in our data set, the administrative records are 800,000 people. So we can look at different people. By the time we're looking at the group we're looking at, we don't have 800,000 obviously because we're looking at only older workers and retirees, but it's a very large plan, and we have people in 2 different pension plans. One is a teachers and state retirement plan. So teachers, sometimes it's hard to figure out who are teachers. Maria must know. Are teachers public, are they state workers or local workers? How do you think of those? Yeah, so that sounds like it's a good answer, but if you look at North Carolina, for example, about 90% of their pay comes from the state, the health insurance comes from the state, the pension plan comes from the state. So, well, yeah, okay, they're hired, just like lots of places. You go to an individual agency and you're hired, but in lots of ways these look like state workers as opposed to local workers. But whether they're one way or the other, in the retirement system they're with the state workers, then we have a separate statewide plan for local government employees. So we're looking at 2 big pension plans, and you put them together, and you've got, in terms of actives and retirees, you've got about 800,000 people there. What do we know about public sector workers from lots of different studies? First, they tend to have lower turnover rates and higher, longer careers. They tend to still be covered by defined benefit plans, although there's some adjustment going on in a number of states right now. But these are typically for new hires when there are big changes in pension plans. And so anybody looking at retirement in the public sector are still overwhelmingly looking at people covered by defined benefit plans. Universally, these people are covered by some form of retiree health insurance. And we know that retiree health insurance can affect retirement decisions as well. So as we think about public sector workers, in lots of ways they look a lot different than the typical person in the private sector, and that's why we're beginning to look at those. So what we're going to be doing in this is to look at the retirement process for these people. So the first thing that we do is look at the flow over time and across workers. And as someone was just saying, it's not necessarily an event, it's a process, and we're going to try to chronicle that process from a career job. What do people do after that? And one way of thinking about that is there's this very strange graph here that goes in lots of different directions. And actually, there are obviously some other lines that we could have added to this, but it was getting a little cluttered. But one way that we're going to think about this is go back up to career employment, and our survey of current workers starts right there, and we're calling retirement this movement over here to either on that right side, or actually you could also think a little bit on the left side. So it's retirement from a job. And that's the way the system thinks about this. You go in and you claim for retirement benefits. And so we start there, and then they can go lots of different routes, and you can go back and forth. And so ultimately, as we continue this process, we'll be able to look at these changes over time. One of the nice parts of having administrative records is we know exactly when people retire or when they claim. We know what kind of annuity they choose, and we know ultimately if they come back to work for the state or the local government. So there's some advantage of having the administrative records, and as Maria said, but that's, you know a lot about some things and not much about others, and so that's why we've added our surveys there. And our survey, 2 surveys conducted to date with 1 more coming. The survey of older workers was a survey in spring of 2014 based on people in 2013 working full-time with the state of North Carolina, aged 50 to 69. So it's trying to look at those people that are thinking about moving toward retirement in some close time period. The survey of recent retirees, again, we've got the universe of people, and so we're looking at everybody that, the population that we draw from is everybody that retired between 2006 and 2014. And so we've got a fairly long period of retirement period there, and then we're asking people what are they doing in retirement at the particular time. So both, we got 2 surveys, retiree workers looking at how they're planning and how they're thinking about moving into retirement, and then retirees about what they're actually doing in retirement. And both surveys are merged with the rather extensive data that we have from the North Carolina retirement system. So older workers, already said all of that. Got these 2 different pension systems. They're pretty close. They're almost exactly identical on the pension side. It's the formula for the state teachers and retirement system is 1.82% per year of service. That's sort of right in the middle of public sector pension plans. For the local government, it's 1.85, for some reason a slight difference. But the local government is one single plan for the entire state managed by the state of North Carolina. All of the state teachers and employees, teachers and state employees are in the same health plan while they're working, and they're all in the same retiree health plan, which is pretty much the same plan for actives and retirees. So we got a lot of commonality there. Local governments, we know a little bit less about when it comes to health care. We know their pension plan, but local workers are not included in the state health plan. And so the local workers can have a local retiree health plan and a local health plan, we haven't tried to contact every locality to get their plan. We actually have looked at retiree health plans in a number of cities in North Carolina, and they often have them, but they're just not the same as the state, typically not as generous as the state plans. Okay, so the survey of older workers, sort of what you might expect of state employees, a little bit less than 3/4 of state employees and teachers are female. Population is mostly married, mostly white, but a fair sampling of specifically African Americans, but not other minority groups. Fairly highly educated. A reasonable sort of salary, and you see that among the total population, you got about 40% of the people are teachers, 40% are state employees, and of course the other 20% would be local employees. Okay, so here's a graph that I sort of like, and you can like it or not, I guess. So this is the age at the survey on the left side coming down. So the rows are the proportion of people of that age when we interview them, and the columns are telling us what percentage of people expect to retire in those age brackets. So if you look at going across the top row, of people aged 50 to 55 in 2013, what age did they tell us that they were planning on retiring? And so you see that about 2/3, actually I think it's a little bit more than 2/3 of the people age 50 to 55 say they're going to retire before 62. And of those 55 to 59, about, what is that again, about 60%, I guess, of the people of those ages tell us that they're going to retire by 62. And in terms of the conversation we've just had on Social Security claiming, sort of interesting that if you've already retired from your job, how do you think about claiming from Social Security? And if you're retiring well in advance, you may have already used up that IRA that John wants them to use before they get there. Of course, these people can go to other jobs, and that's what we're going to be looking at. And so if you've already moved to a secondary or bridge job or self-employment, a question would be, if you retired from your career job early and then you pass 62, what does that do to your probability of Social Security claiming? Something we haven't looked at before. And so the rest of the part of the table I wouldn't pay too much attention to, because these are people that are still working at relatively older ages after a lot of people have already retired when we're looking at them. So then we ask these people, do you plan to work? And someone mentioned plans different from actions, and we'll look at that issue again when we get to the retirees. But here we have, you see that about 3/4 of the people tell us that they're going to work after retirement. But the overwhelming proportion of people here are telling us that they're going to work part-time. And again, these are people that are going to retire with a pension plan, with a health plan that's highly subsidized for these people that are doing that. Most of these people would get the opportunity to stay in the state health plan at 0 premium for the rest of their life. So they have a pretty good base, and now if you're thinking about how does that pretty good base affect your decision to work and also ultimately the claiming of Social Security benefits. Among those that don't plan on working, the bigger response here is that they're financially capable of not working there, and that's what they're planning on. So ultimately, if we're going to continue to follow these people, and the issue are these plans realized? And again, we have the unique ability that even though we haven't gone off for our second survey here, we can look at the administrative records, and we can see among those people that told us in 2014 would they retire in the next 2 years, we can observe actually did they, by our definition of retirement here, leave state employment because we know exactly the date. And so far we have pretty high correlation between the plans being realized on this dimension. We have a paper we're working on now about a planning paper and our plans realized, and this will be a part of that paper as well as the current one that we're working on. Just a simple set of regression coefficients here. Basically the one on expected retirement age, sort of conform with what you might think on other things. Expecting to return to work, sort of interesting in a couple of dimensions that obviously the later you retire, the less likely you are to expect to work after retirement. If you look down a little bit, you can see that education is linked to expectations of working after retirement. Sort of an interesting thing on the far side, expect to return to work. If the spouse is in good health, people are less likely to return to work. If the spouse is working, seem to be more likely to return to work or plan to return to work. And one can posit several hypotheses there that we haven't explored in any more detail than this. Again, things that you might expect on the left-hand side of that column. Teachers retiring earlier than the general state employees, police and fire retiring earlier than that, and us college professors hanging around for a while longer. So again, sort of expectations all around there. So it looks like the survey is picking up things that we would have expected there. And these are just the key findings or observations, maybe would be a better word at this point, about that. And the key here would be that 2/3 of the employees still working in their 50s are planning on leaving state employment by the time they get to 62, which is certainly opens up the opportunity for lots of different issues for us to explore. And 75% expect to return to work after retirement. So then we looked at retirees, and we took everybody that had retired, and having learned some things about how state employees respond to surveys, we took everybody, looked only at people that had email addresses with the state, and sent email surveys to 30,000 people. One thing we learned by that is we can overwhelm Qualtrics in sending surveys out all at once, so we've learned something else there. Retirees look pretty much like the people that are still working in terms of their basic characteristics. And again, we know exactly what they're getting as retirement income. We know exactly what their salaries were beforehand. We know what people might... The interesting thing about the state government is they have a lot of ways that people can sort of check on their retirement income, and we can monitor that. So they have a system where if you want an estimate of your retirement income, they can go on and get a quick check or a more detailed check of a potential retirement income. And we have whether people are doing that. There's a supplemental plan that the state offers, a 401k and a 457 plan to all of these people. And we know whether they're contributing there, and we know if they're checking in with the provider of that plan. So we've got a lot of data that we can move forward on. So one of the things that we were interested in are these retirees working? And here you see that 70% aren't and 30% are. So that's different than what people told us, but remember this is a snapshot of are they working today? And we haven't tried to explore whether or not there was an intervening event, so they could have worked for a year and then left, but right now this is the snapshot of people, and these are people that were retired in 2014, and we are observing them in 2015. Interestingly, again, something special, I think, relatively special for the public sector is the ability to return to work at the same job. Yes, in the private sector there's contracting and there's phased retirement and something, but I think these numbers would swamp that opportunities in the private sector. And so you see that among that 30% that have returned to work, about half of them return to work for the state or the local government. And there are lots of rules and regulations in the paper. You can go and see exactly what the state says, how long does your break-in service have to be, and a variety of other things there. So still looks like a lot of people are returning to work, and we need to do a little bit better, we need to do a better job of trying to observe the intervening events here. Among those people that aren't working, again, we're a snapshot, so of those people that weren't working, we ask them, do you think they are returning? And then if 21% are saying yes, they're likely to return to work, so again, this snapshot issue would say maybe we're not as far off as we thought about these people returning to work. And left side looks pretty much like what you would think in terms of education and income and things like that. On the right side is, do you expect, have you returned to work in the public sector? And you can see that some interesting things here is that the more highly educated are less likely to return to public sector, so maybe they've got external opportunities there. Local government employees, not statistically significant, but a little bit less likely there. Again, we see some issues down here on currently working on caregiving and number of children that we need some further view of. And then this is just another equation on planning to work, so get there. So returning back to trying to think about our key findings on this side, about 30% of retirees are working within this time period. We've looked at how long ago they retired. Remember, some of these people that we're surveying were retired in like 8 years earlier, some 6, some 4, and some more recent. And so we're in the process of trying to sort through that as well. And then what we find here is that among those not working, there's still some future plans for returning to work. So where are we in this process? We have conducted 2 surveys. We have our administrative records. We've matched the administrative records to the surveys. Our ultimate plan is to have this sort of tracking of people through their final work years into retirement and what do they do in retirement. And our argument or our premise basically is that looking at public sector employees is interesting for a variety of reasons. One, they're about 16% of the total labor force. and not too many other people have sorted out public employees and looking at this retirement transitions. Thank you very much.
All right. I apologize. I did not analyze any new data. I did not call anybody. If I thought about it, I should have called some retirees from North Carolina to ask them. But that's essentially what these surveys are doing. So perhaps extraneous. Better to do it scientifically. All right. So some of the motivating questions for this paper. What are the retirement strategies and patterns? Originally I had said, what are the retirement plans? But that's not actually what, we know what the retirement plan is. There's information on the website. What are the retirement strategies and patterns for workers in government jobs who have these DB pensions and also have retiree health insurance? What are they planning to do pre-retirement? And what are the bridge to retirement paths that these employees take after they've left these jobs? So these are kind of the big motivating questions that I got from the paper. And you might wonder, well, why is this important? So I didn't know that 16% statistic until just now, but 16% is a pretty big, pretty substantial minority of the population. From a government perspective, we might be interested, like these state governments might be interested, like Maria knows, that benefit design is important. Figuring out what are the best kinds of return to work provisions is important. Being able to predict the supply of experienced workers is something that, if you talk to professionals, that's often one of the things that they want to do. How do we do this without doing illegal things? How do we predict what our age profiles are for our workers so that we know how to manage our hiring practices? And for public policy more generally, we may be interested more generally in the benefit design for return to work. We may be interested more generally in what's the demand for the return to work after the benefit payouts begin. What are these people going to be doing in terms of Social Security, in terms of Medicare, in terms of paying their taxes? Additionally, why are people returning to work? Why are people not returning to work? What are the differences? Based on this, how can we change our benefits? How should we change our benefits? So that people don't lose quality of life. And additionally, there's some kind of economic theory questions that this larger project may be able to answer. Looking at the bridging to full retirement behavior for people who have defined benefit pensions, and what are the interactions between plan design and behavior? Okay, so I did not know that there was going to be a third survey, but I'm glad to hear that there's going to be a third survey following up the people in the first survey. So they fielded 2 surveys with extensive questions on retirement, plan expectations and choices that you've heard about. One of these surveys is a pre-retirement survey, and another one is a post-retirement survey that it's important to note that this is just sort of a snapshot. It's a point in time post-retirement survey. And then they merged these surveys with administrative data. What was shown today was only very preliminary work. The results today are just a small fraction of what they're going to be able to do. So basically, they've just presented some summary statistics and some correlations from these 2 surveys that they've connected with very basic demographics. And they have much, much more information that they're going to be able to do to get into more deep questions. I know this because I asked for the surveys. Some basic findings. I don't know, you presented them pretty well. I don't know if I need to go over them again, but current employees, they do plan to retire pretty young. Most do plan on working, and most plan on working part-time afterwards. Most of those who don't plan on working say that they don't plan on working because they have enough money. They don't think that they're going to need to work. Or, on the other end, which is worse, they expect that they won't be able to find work, and you might think that there's concerns about age discrimination. And again, the younger the age of expected retirement, the more likely that people think that they're going to be having the second career. They did some regressions. They find that men expect to retire later. Teachers plan to retire earlier. Police obviously plan to retire earlier. Professors plan to retire later. 69% of retirees are not currently working. And this is not necessarily at odds with the expectations, as noted before, because this is a different group. This is a point-in-time kind of thing. We don't know if they've returned to work, and we do know if they plan to return to work in the future, but we don't know what the full realized spectrum is. 14.4% of these people are working for the government, 8.6% in the same place, 5.6% in the new place, 16.4% in the private sector, and 61% say that they're unlikely to return to work if they're not currently working. Again, men are more likely to be working, married are less likely to work, people with high account balances are less likely to work, people in this teaching system are more likely to work for the public sector, and people with caregiving responsibilities are less likely to work. Okay, so that's kind of summarizing what you just heard. There's some things that I think the authors ought to be careful of as they're moving forward. There's three forms of selection that I think are important. The first is just the standard sampling bias. And actually, this isn't in the paper, but you did mention that the percent female is similar to what you'd expect with administrative records, which is good. Because we know that women are more likely to take surveys, you might worry that the sample in the survey is a little bit different than what the sample of the population is, but it doesn't sound like that's the case. Additionally, the summary statistics have a much larger sample size than what the regression results are shown, which suggests to me that there's a lot of people who are not answering specific questions, and then those people just get dropped out of the regression results. It would be interesting to see who's dropping out of these regressions because they have missing data, and then compare those people on non-missing data to see if we think that this might be a problem, that there's a specific kind of person who's not answering questions. Additionally, we might want to think about, well, who is excluded from these surveys, and this was, again, talked a lot about in the paper and during the presentation, because of the decisions that they've made about work. So this is not a panel, although it sounds like it will be a panel when the third survey is run. And so everyone, when they're looking at these results, should be very careful about comparing the results between the two surveys. And this is especially tricky because of this age dimension, where you see these kinds of interesting results where, as you get older, you're more likely to stay in work. Okay, more things to be careful about. When we're talking about these correlations, we need to be very clear about if we're talking about conditional correlations or unconditional correlations. For example, we see that men are more likely to work longer, but people who are police and firefighters work shorter amounts of time, and when you just put one of those variables in the regression, you may get a different answer than when you put both of those variables in the regression. Similarly, people whose spouses have good health are less likely to work, but that's controlling for caregiving. So if you're caregiving for a spouse, you may be less likely to work. When you put these things together, you have to remember that these are conditional probabilities and not unconditional. Additionally, there's a small sample size for some of these populations. There aren't many men. There aren't many people with professional degrees. I don't know how many people have more than 3 children, but if it's a very small number of people, then you should explore how much of that is a real effect and how much of that is just a few random people with very strong preferences. Also, for the people who are not familiar with the North Carolina system, it's important to be very clear on these plan details. Oops, sorry. Is it a replacement for Social Security? It's, after looking online, I see that it's not. It's not like Illinois. It's in addition to Social Security. And additionally, there's these specific rules, like there's a waiting period before you can take your benefits. There's income limits if you get reemployed. So there's these different kinds of plan design elements that may be important for the kinds of results that we're finding on return to public sector work. Future work is going to show responses merged with much more detailed administrative data. There's basic demographics, they have the full employment histories, they have salary information, they have benefit account information. They know what choices people made for plans. They have detailed money information. They have detailed partner information. They have all these really cool risk aversion questions. Like, there's just a whole lot of really cool stuff that they're going to be able to do, looking at heterogeneity, looking at future expectations, and so on. One of the interesting things about, so I spent a lot of time looking at the TSERS webpage because it's like they have so much information. They have a lot of different payout options. And these may be related to the choices that people are making. There's like 3 different choices for how you deal with joint and survivor benefits. Like, do you want to actually have your, if you die, do you want your spouse to be continuing to get 100% of the benefit or 50% of the benefit? They have this neat little thing where, well, I don't know if it's neat actually. You can get more money before you turn 62. But then when you turn 62, you have to start taking Social Security, and then they start giving you less money. So you should be getting the same size paycheck, but they kind of block you into taking this early payout, and you get the same size paycheck, but some of it's coming from Social Security, and less of it's coming for the pension, but it's a way to kind of increase the amount of money that you get earlier. And I thought that was kind of an interesting design thing. Additionally, if you are rehired and then you work for 3 additional years, you get to change your mind about what benefit provisions you chose. You can say, well, you know, my wife died. I don't care about her survivor benefits, or you know, I got divorced or whatever. But only if you work for 3 additional years afterwards. Additionally, there's these defined limits to public reemployment. There's a 6-month wait before reemployment, and there's earnings limitations where you can either get 50% of your previous salary or $31,380, whichever number is bigger. So some extensions that I thought would be interesting. You know, where do people's retirement money come from? Like, what kinds of packages are they putting together? Does everybody claim at age 62, or do they claim when they leave work? Or, you know, what kinds of effects does this have on Social Security claiming? What's the effect of home ownership? They have a financial fragility question. Where would you get $2,000 if you had to get $2,000? And you could look at see how people who are financially frail behave differently than those who don't. People who are risk averse, how do they behave compared to those who don't? Additionally, you can look at this work cycle. You can look at these bridges to retirement, which is really interesting. And they have a lot of questions that are going to be able to open up a joint retirement literature question, because I don't think there's enough work done on joint retirement yet. Some extensions. So is this a story about teachers who are substitute teaching? So I guess it's 40% of the sample is teachers, and 70 to 80% of the sample are participants in the teacher and administrative program. But I guess only 40% are teachers, but still, you know, when we're looking at these part-time jobs, the people who are actually realizing their outcomes, they're working part-time. What specific jobs do the reemployed do in the public and private sectors? Are they getting new careers, or are they continuing their previous jobs? Are policemen becoming security guards? Are teachers becoming you know, tutors and substitute teachers? Or are people, like, you know, finally getting to open up their, I don't know, wine bar or whatever it is that they've always dreamed of doing? Real estate agents. That's what all the retired teachers at my school became, was real estate agents. And how do different professionals behave differently? So this gets to some of what Nicole's group was talking about yesterday. You know, what are the physical demands of work? What do the ages of retirement mean? What are people's outside opportunities? Okay, so thank you.
So Bob, so yesterday we heard from John Chauvin about the benefit of delaying Social Security. And is there, what do these pensions look like? You know, DB pensions in particular kind of have a reputation for really penalizing work going forward. And I was curious, how strong are the incentives to leave early in this particular plan?
So it's the typical DB plan in the normal retirement requirements are, if you have 30 years, you can retire and get a full benefit and have your health insurance at any age. So that would mean that in school teacher situation. If you came right out of college at 22, at 52, you could start your benefit. I have a personal observation of that behavior. My wife did that. So
she worked 31 years to get nothing.
no, well, nothing, John. So what happens is in a typical defined benefit plan, if you stay on one extra year, you get an extra year in your benefit formula, and your salary may go up, but hey, in North Carolina, we don't give salary increases anymore. So basically, you would have 31 times your average salary instead of 30, but you've given up a year of benefits. And if you do a present value calculation, it's going down. And you know, the older you get, the more important the year you're giving up, and the less important the gain out there. So the change in the present value gets smaller and smaller, and it could actually go negative, obviously, if you die after that year or something of that nature. You would actually have a negative value of changing. So there's very strong, if you don't have 30 years, you can retire with an unreduced benefit at age 62 with 20 or 65 and 5. You can retire with an early benefit at 50, and there's a schedule of how that benefit is reduced. So if you start early retirement benefits, there's the gain of that extra year, the gain of the extra salary, and an elimination of some of the reduction there. So we've actually been working on a simulation model to try to spit out any number that you want at any age, depending on what the person's characteristics are. But very strong early retirement incentives.
Hello. I'm wondering if you'll be able to tell anything from your survey asking directly about the adequacy of retirement income of pre-retirees and post-retirees. I ask because we just did a study on retirement savings among people close to retirement. The results are pretty depressing, and we were one potentially troubling observation is that if we looked very briefly at surveys of people who are approaching retirement age and asked them, what are your plans for retirement? What are your sources of retirement income you're expecting to rely on? And a very large number of people say they plan to continue some other form of work, start a business, continue working until they're 70. And then you look at retirees, and a much lower percentage of them actually do work. We didn't explore that beyond, but I'm wondering if you'll be able to tell that from your...
Yes, is the direct answer to your question. If you look at North Carolina, as Joanna said, they're covered by Social Security, and they're covered by this reasonably generous DB plan, and they have retiree health insurance. So if they didn't save anything outside of that, and they actually, not everybody works 30 years, but if they did work 30 years, you would have a pension benefit from the state of about 56, 57% of your high last 4 years, and you would have Social Security. So you're probably at the level that any financial advisor would say that's a good target for. So you're at 85% or so. Of course, not everybody works 30 years, so if you go to 20, then it's different. The state retirement system is actually very interested in looking at retirement readiness. They're interested in looking at having an adequate retirement income, and so one of the reasons that they play nice with us is I play nice with them, and so we're looking at the issues, some of the issues that they think are very important as well.
Yeah, one of the things about your paper illustrates sort of the potential power of survey information connected to administrative data. And I wonder if you could comment a little bit more on how you gained access to the list that you needed to do to direct your surveys to people in the administrative data who you could then link the administrative data to the survey response. Can you just comment a little on that?
Yeah. So I have worked with our state treasurer for a number of years on a number of different projects. About 5 or 6 years ago, She had appointed a study commission to review the Social Security, the pension system, and make recommendations for change, and I chaired that commission for her. On the basis of that, we looked at a number of other things, like the opportunities for people to save out through employer-provided retirement savings plans. For those of you that don't know about teacher retirement savings plans that are offered, it's a very strange world. In North Carolina, teachers have the option of saving through the state-managed 457 plan, the state-managed 401k plan, a locally managed 457 plan, and a locally managed 403b plan. 403b plans being the traditional retirement savings plan. So there's this hodgepodge out there. A locally managed 403b plan in general, it's run by the school board and school districts, and they let Joe's insurance company be offering these plans, and so it's a mess. And one of the things that we did, working with the treasurer and the State Board of Education, was to do a survey of the districts, find out a little bit about that, and on the basis of that, we, the treasurer wrote a bill and got a North Carolina 403b plan with a single provider to be offered. So I've worked with her. She's an interesting woman and has good ideas and is interested in research. So the one thing, I had a good match at the top. A match at the top is always good. But I've also had a number of meetings with the executive director of the retirement system and all of his team, and I keep them well informed. And my general strategy is that they have ideas of their own, and they're often good ideas for me to do as a researcher, and it makes them interested in what I'm doing. And so I work very hard at maintaining that collaboration. John, let me just say one last thing about this annuity choice, and that is that I just completed a review of 85 large state-managed pension plans for teachers and state employees and local employees. And so all of these plans have a number of different annuity options. And I think the number is about a quarter of them have this Social Security leveling issue, which sort of pushes you toward claiming right at 62. And then the other options are, there's some interesting ones there. But in any case, this is not uncommon. It's not universal, but it's not uncommon there.
Yeah, I wanted to thank Joanna for leaving that slide up, because that slide applies to you, Ellen.
Thanks, Ellen.
Okay.